out there right now is like either not helpful or just weird. I don't know.
Hymns.
And we are live. Not that it really matters, but can everyone see my screen? So
Yes.
the first thing, a website. Zillow is an okay website. A lot of webs doesn't really matter whether you use Zillow, Redfin. um, all these broker websites are basically the same. It's just kind of preference.
I feel like
Leo, I
nothing on
sent you
north
the
side.
single family home.
Why is everything
Look at
central and
later.
southeast?
What? What, Jake?
Why is everything like central and southeast? Why is there like nothing in
Jake,
north?
it's because the search is down to multifamily home.
Jake, because I have it for multifamily homes, and if you don't know, the city of Carmel does not like development of multifamily homes. So you can see,
They they thrive on suburbia.
yep. So you
I
can
didn't know all the north though, like North Indy.
no, and these are not even multifamily homes. Um, these are going to be townhomes that are for sale. Neither are these. These are all single family homes. So these are misclassified.
I sent you a single family home over Discord, Leo, to look at later.
All right.
Townhome like it's like a single family home, but like it's sharing a wall or something. Like what's
Yeah,
a
it's just a shared. It's just going to be shared. Sometimes it doesn't even share a wall. It's not.
Yeah.
It's not
it's
even.
just really compact, like really.
Yeah.
It's not like a
Think of it
normal
like an
suburban
apartment,
house.
Jake. Think of it like an apartment.
Oh, I would
For our
move.
purposes, Jake, think of a townhome like an apartment. Multifamily homes. So the
It's
big
a duplex.
distinguisher between yeah, they're duplexes, triplexes. They have separate entryways. Um, and when you buy them, you can think of them as 2 or 3 or 4 separate units. And I have this search set up right now so that everything we have here is under $550,000. The reason I have it that way is because I qualified for a loan up to $550,000 based on my income. So a little tidbit of information, Ashley. Most likely, depending on whatever your income is, you're going to be income constrained when you're younger. And this is for an FHA mortgage. Um, so Federal Housing Administration, you only have to put 3% down on a mortgage. You can get really high uh, loans, but most likely you don't even want to go this high. Um, you'll there there's some mixed information out there, but I like to stay around the 300 range. But I have it just up to this range because this is technically the max amount I can get a loan up to. Because you want to think when you buy a home, even if you think you love everything about it, you're probably going to want to do some stuff with it. But I'm going to put these side by side. This is the rental assessment template I have. Put the zoom to 75%. Create a duplicate. I'll actually just, oops. Let's start looking at some of these homes. Let's start looking and see if we like any of these. First thing I start, it looks like right now, as you can see, downtown Indianapolis is the only place where there's any duplexes even on the market. Not surprised. If we looked about 8 or 9 months ago, there were duplexes all along here. There's a couple reasons why a lot of these duplexes are not on the market anymore. They're either sold or higher interest rates basically just drove people out of the market. Um, you can see a lot of these have price cuts or they've just been on the market for a long time. So we can start going. Looking, and the first one that we kind of like, we'll analyze. So we can see this is a duplex. Almost all the ones in Indianapolis, by the way, are duplexes, meaning they have 2 units. Um, this impressive 6-bedroom, 2-bath duplex features one side that has been completely updated and one side that has been well maintained. That has been a well maintained home for the owner for several years. Hardwood floors, large French doors, original build-ins, formal dining halls and updated kitchens with mudroom areas, a wall-up attic on each side. Okay. Furnished owners can add extra living space surrounded by. Okay, doesn't give us total. The red line. Ooh, it has access to the red line district. Nice. Okay. East side is 3 beds, 1 bath. This is where, you know, you just kind of go in. Ironically, most people look at the inside. I think the most important thing when you're looking at real estate is to try and get a look at the foundation of the outside. A lot of these homes, the most important thing, scroll past all the shit they say because, you know, they're trying to sell you the home. Try and get information. I passed it somewhere. Where was the home? When was the home built? Last sold 922. You can see the tax assessment steadily gone up. Holy shit, they had a huge tax bill in 2017. I wonder what that was for. Here we go. Okay, you're built 1920. Okay, so most of the homes in Indianapolis were built around that time frame. You know, uh late 1900s. So it's not what am I saying, late 1900s, early 1900s or late 1800s. Um, not out of the ordinary. Um, yeah, block foundation. I mean, whoever staged this did a beautiful job. And the only thing now we look for, you know, it's a 3-bed, 1 bath, are things where we'd have to put money into it. The kitchens look okay. Definitely we need some new appliances if I was to rent this out. Like, I don't know what this stove is. Like, the countertops are fine, the sink is fine, but this oven is, or this stovetop is ugly. Yeah, they have the cramped bathrooms. Most of these properties do.
So typical with older homes.
Yeah. They just have these really cramped bathrooms.
People were so tiny back then.
Yeah, I guess, man, people just grew. Okay, it comes with washer and dryer. Man, we got some hoarders in here. No judgment, though, I guess. So this is the stage side, I guess. They can kind of tell their story a little bit more here. This is the side that's updated. The other side's not updated. So, all right, back of the home. This is where I would really take a good second to look to see if there's any big cracks. With brick, you're not really going to see it, but sometimes if there's big concrete foundation, some of these homes have a raised concrete foundation. You'll see sometimes like a giant line through here. So sometimes they'll have a giant crack in the concrete foundation, which is not good. Um, Immediate questions I have here. So like, if we were to go, the first things, the first stage of buying a home, by the way, guys, if you're taking notes, would be due diligence, right? So obviously we don't have all the information. You have to make some reasonable assumptions. And so for the exercise, I'm going to assume that there's nothing super fucked up about this property. You know, like mold growing inside or structural or foundational issues, right? Obviously though, if we were going to go buy this property, we'd go get a survey done. We'd get an engineer, architect to go out there and make sure, you know, go check the property out, make sure those things are not have not occurred or are not occurring, right? We'd want to know things like this: when's the water heater been updated? You know, when is the roof? You know, when's the roof been replaced? Um, Things that they would call capital items, or another way they could say it is um, non-recurring capital expenses. Things that you would typically think would only be replaced once every 10 to 20 years. And you'll see this when you're first getting into the investment game. You may find a property where you're like, damn, this is a great deal. I've seen so many properties where I looked at them, I'm like, holy shit, this is such a great deal. And then I realize, I'm like, wait a minute, this needs a new water heater, this needs a new roof. I'm like, there's a crack in the foundation. I'm like, the driveway needs a garage door. When you start to kind of get these bigger line items, I'm like, That's 35K right there, and that's the 35K discount I'm getting on this home. So a lot of times people aren't stupid. They're just, kind of lies of omission. I don't know if you guys ever heard that term, but, you know, kind of nasty back. I immediately think it, these are kind of things where you kind of get a trained eye if you're looking at real estate. I would replace the windows on this shit. Anyone see how nasty these windows are? It's just things like this where windows aren't that expensive, but it'd be a couple grand to tear these out and get nice new replacement windows, doors. But those are that's my 2 cents when I'm looking at a property. And now let's go look at the rental assessment sheet. First thing I do is, I'll go over here. So bedrooms, 6 bedrooms, 2 bathrooms, property type, duplex, house square feet. I don't even think it says. We can make a reasonable estimate. Uh, Parcel number. So I'm pulling their state parcel to see if they have their square footage on here. By the way, all of this is public information stuff. Their assessor property card's kind of cool. You can see they rate the neighborhoods. I always thought this was an interesting system. I have no idea what they say, but the assessor for this neighborhood says this neighborhood's static, meaning, not much is going on here. Kind of interesting, I don't know. They value this home. The appraiser for 2022 says this home is worth $344,000. This is just for tax purposes, by the way. So never ever buy a property based on their tax assessed value, because you're gonna lose a lot of money. Central heating, total replacement cost $290. It does not look like they have. Yeah, they have full basements. Okay. It doesn't look like they have square footage on here. All right. All right. So the first thing, like I said, what's their lot size? Lot size 6398. Close that out. 6398. Downtown Indy. Overall score. My out of 10 for this one would be a 6 out of 10. The purchase price they want is $299. 299900. How funny would it be if we already underwrote the same one? Oh no, we did one. We did their next door neighbors the other day. 4237 North College.
I guess we like static neighborhoods.
No, I think you guys will see this. A lot of neighbors sell in tandem because once someone sells and they get a confirmed like, hey, I can get 300 for it, they're like, shit, I can get this much for it. So they kind of all sell together. Interest rate quoted recently is 5.5%, somewhere around there. So we'll assume we're no better than those schmucks. The assumption, I assume 1.15. I assume 1.5% for property tax, and you could see my assumption is pretty spot on with the actual annual tax amount. Oops. 44. I'm understating it a little bit, but now it's time for financial analysis. Is everyone still with me? Any questions so far? I don't want to move on. So far there's really been no financial analysis, just kind of looking at the property. giving some opinions.
Yeah, I'm good.
Yeah, I'm with you.
All right. Here comes the part that's a little bit tricky. Where we have to kind of this is where you have to have a little bit of knowledge of what you can charge in rent. And we don't know the exact square foot of this place, but it's 3 bed, 1 bath. They're mirrored apartments. I'm gonna assume most 3 bed, 1 baths are about 1,300 square feet. I'm gonna assume um, we can literally go to this place and where was it? If we want the best information, switch this and go for rent and say rent bed and baths, 3 bed, 1 bath, done. This is a 3 bed, 1 bath, and we can plug for because we have to assume to get your rental assumption is the make or break for every property. And this is the number that needs the most scrutiny. No matter what, if you are going to sell anything in life, you need to think very deeply. And the best information you have are is right in front of you. So what I'm going to do is take a nice average of all the closest properties for monthly rents. So 1095. Sorry. No, I had it right. Average 1095, 975. No, that's wait, why are they pulling in? I only want 3 bed, 1 bath. See, sometimes it pulls in 3 bed. You only want 3 bed, 1 bath. I don't even trust this one. See, some of these look like too nice. This is like too nice for me to pull in. Don't try not to pull in outliers too. Like this will skew your data. It's like get the fuck out of here. You can charge $1,500. And this is a house, not a duplex either. All right. Let me see if I can filter this more. Houses. Undisclosed location. I've never seen that before. You can go rent from an undisclosed location. I'm gonna go back on Zillow to the original home here on College and try and get back to rentals. One point two, 1.1, 975. See, like this is like our direct competition. Renting out for 975. See? 2 bedroom. You can expand a little bit. All right, let's see what our rental number came out to. Probably about $1,100. And then obviously this is a duplex, so this monthly rent number would be times by 2 because we have 2 units in this. And we're starting to see a sad reality already. Sorry, let me zoom in a little bit for you guys. Zoom 125. So the way this formula works is it's basically just saying, what's your gross rental income? And I took an average of the 4 most comparable properties. And those are all, as you guys saw, probably within a quarter of a mile. They were all 3-bed, 1-baths, very comparable to what we would have. And this is assuming we don't fix it up, and I just buy it for this price. No money, no more money is put into it. I'm not assuming we do anything with this property. And you can see we would come out to then times that by 12, make $26,000 a year in gross rental income. And I'm assuming we have a vacancy or loss rate of about 5%. The actual standard for market rate properties is typically around 93%. I give us a little bit of leeway with 5%, but that leaves us with a net rental income of about $24,000. And then you have to subtract your operating expenses. And this is where you start to get into the details of what a property really entails. Where if you if me and Ashley decided let's go into real estate business, we're gonna go out on a business venture and buy a duplex, and we're gonna manage it all ourselves. How much would it really cost us a month to do it? It's hard to say. I have direct references. I have a direct quote from insurance from multiple coworkers and actually calling them myself. And the best number that I could say, a conservative number too, is about $80 a month for renters insurance, assuming we would get property insurance, and we'd also get insurance assuming they destroy the place. So you want to have homeowners insurance, and you want to have some downside insurance in case they completely destroy the place. It'd be a nice thing to have. I budget $50 a month for administrative costs. For me, this is a line item that I put in there for anything we would need to do to go out, any tiny items a month we would need to, get out of there, whether it be ship something or even, oh, look at Brownie in the background. Any little any even like a piece of mail got lost, or you know we need to go drive down there a single time. I mean, that's $50 in gas right there. And then you can see I'm budgeting in total about 6% of income. So the way this formula is working, I'm taking 6% of our net operating income, not even 6% of our gross revenue. I'm taking 6% of our NOI and saying, dedicating 6% of it to miscellaneous repairs. So, sorry, 3% of it to miscellaneous repairs, saying about 3% of it, so $700 a year, would go to fixing a door that's broken, or fixing a washer and dryer. There's people break shit, things get broken, and I'm not that handy of a person. Maybe Ashley's more handy than I am. Maybe she'd be a big asset to us, but not the handiest person. Hopefully these costs are lower than they would be, but these are all numbers that I think are fair assumptions to have. And so then you get down to the most important number for our analysis, which would be your NOI, which stands for net operating income. When you're looking at these properties, this is the number that basically will make or break it for you. That number comes out to be 17,356. You see, our mortgage payment, which is calculated in H11, formula works as such. Your payment, or first it takes uh, your interest rate, divides it by 12. 12 times years, and then takes your initial finance amount, because this is only be a 3.5% down payment, and then you get your total mortgage payment, and you see on a yearly cost by cost basis, we'd pay $20,000 in our mortgage, and we'd be cash flow negative. However, we'd be positive 6% for a total investment. This is the trick question. Not a trick question, but this is some this could be a tricky question for people who don't really understand finance that well. How can it be, Ashley, that we are losing money on this property? We'd lose about $2,700 with this budget I put together. Yet we'd actually, our total return would be about $1,200. Do you understand?
Yes.
Why is that?
Yes.
Why is it then?
Uh, put Bill on the spot. I don't know.
It's okay to not understand. You could say I don't know. Because this is equity. This cumulative principle, it's because the people would be paying down our mortgage. That is why. This $3,976 would be money in which would be paid down on our mortgage for that year. So on top of interest being paid, are the equity accrued in this property, meaning the total amount paid down on our mortgage, would be $3,976. Does that make sense? Because a mortgage payment is not just interest to the bank. You're also getting a percentage ownership in that property every single year over that 30 years. That's typically how long a mortgage is. It could be 15 or 30 years. And that would leave you with a total of $1,220. Because this is just these two numbers added. Your cash flow, right? Your cash flow would be, we'd have to spend $2,700. However, we get percentage ownership in this real estate, in this real asset of this property, which would leave us with a total return on investment of about 6%. So depending on your investment goals, Ashley, this may be a good investment. If you're saying, well, I have a steady job, I don't really need cash from a property, and I honestly could take the cash losses. Like I could take the cash, like I could take the write-off on my taxes. I don't need it, and I would like the capital appreciation from real estate. This could be the perfect investment from you. Where some people would say, "No, I'm pretty squeezed for cash. I need all the cash flow." Like Robert Kiyosaki, cash flow. Poor dad. Poor dad, I need cash flow. Rich dad, he's always like, I want properties with high cash flow, high appreciation. Not all markets are like that. Some markets, you break even on cash flow, but you have high appreciation. Both are valid depending on your investment goals and depending on what you're capable of managing. Brownie, Brownie, come here, baby. Oh my gosh.
You do be
Brownie,
barking though.
Brownie likes barking at the dump truck, the trash man when he comes.
Oh.
Does that concept make sense to you though? How although you're losing cash, you're actually kind of you're gaining equity in the real estate. So like you're
Yeah.
you're gaining ownership.
Right.
And
You still gain total value.
Yeah, so the total value is going up, and you can see this is just year one, right? Typically, my personal belief, Ashley, if you want to invest in real estate, most people get rich in real estate, they own it over their life. You own real estate for a lifetime. So when you do these analysis, it's very important to do them. The typical lifetime is 30 years. All reputable people do they call them discounted cash flows over 30 years. That's the typical holding period for real estate. Just for analysis, even if you don't plan on holding it for 30 years, which most likely we wouldn't. If me and you went to go buy a property tomorrow, Ashley, we maybe would hold this property for 5 or 6 years. You know, but
Yeah.
you at least do the analysis for 30. Um, and I have growth rates in here that are pretty conservative, but you can see kind of how that every year your return on investment gets slightly larger, and you start to get pretty big bumps, and how this number. Sorry, I'm not super familiar with sheets. Freeze. One row. Oh shit. That's not right. I think I understand it now. There we go. So you'll see your cash flow, your total return on investment, and your cash flow will slowly start to turn positive over the life of the investment if you're assuming your revenue growth, because you slowly start to pay your mortgage down, and typically rents outpace expenses. That's how it's always historically been. And that's why people who invest in real estate typically get very rich. Um, Obviously, your assumptions are everything in these analysis, but this is one very rudimentary, very basic assumption. And based off our purchase price here, we're assuming this would be a cap rate of 5.79%. Cap rate is the most important metric by which you would buy a property. So Jake, I hope you have a pen and paper out. I hope you're like the dude who's writing everything down. Cap rate is something in which is being studied thoroughly right now, because it didn't used to be used so frequently and didn't used to be used so aggressively. And in my opinion, cap rate is going to be what causes another catastrophic market crash. But you guys can look mathematically on how you value properties. But your capitalization rate, basically, you take a net operating income and you get a value for a property based off of it. And you can already kind of tell where I'm going with this, I hope. Because to get your net operating income, you already have to have some assumptions built in, assuming you don't already have an operating property, right? If this was an already existing property, we can just use cap rates that are already existing, and then boom, you get a value. But for this, like, you have to assume, I'm already assuming an NOI and then having to back into a value here. But I guess it's probably a good time to explain what a cap rate even is. Capitalization rates, also known as cap rates, are measures used to estimate and compare the rates of return on multiple commercial real estate properties. I think that's an unfair way to describe cap rates to normal people. This is how I would describe a cap rate. A cap rate is the percent on which you want to make basically on your money. You can think of cap rate as a yield on your money. So this is saying if you're okay, Ashley, with making 4% on your money, then you would pay $433,000 for this property. Okay? Now, if you want to make 6% on your money, you would pay 286 grand. Does that make sense to you?
For the most part, yeah, I think.
If you want to make more money, you're if like cap rate is a very important concept to understand. So I'll explain it a different way. You would pay you're not willing to pay more. And that's what some people get confused with. You're basically requiring a higher yield, right? The higher the cap rate is,
Oh,
the higher the yield you're wanting. You're basically requiring them to sell it to you for cheaper. And however your brain works to think about it, it would basically be like um, you know, if I'm if you sell me anything, if you know like how bonds or anything else works, if I give you $10 and I said tomorrow you give me 15, right? And you're like that doesn't work for me. Tomorrow you give me 17, right? You just required a higher cap rate for your money. Does that make sense? You required more money from me for the same $10,
yeah.
right?
Yeah.
The same concept is here. For the same $17,000, we're using the same $17,000. This property, no matter what, will only give you $17,000. Do we all agree on that? You can only get so much rent out of this property unless you're willing to like renovate it, put like I said, if I took this property over, I probably put new bathrooms in, new windows, you can go through that whole exercise. But to keep it simple, let's assume we're going to be slumlords and keep this property shitty, right? And you're only able to get $17,000 out of it. And you're only able to achieve this rent. And you're basically telling the person, I am not going to buy your property unless I get 8% on my money. Ashley said, I'm a money girl. I I don't take shit less than 8%. And you know why you would do that, Ashley? You don't have a lot of money. Me and you, we don't have a lot of money. So, the more money you have, the lower return on your money you're willing to take. This is the thesis.
Does that make sense? Because 1% on $1 billion is more than 10% on $1 million, right? You understand?
Yeah, sorry, my headset was muted, my bad.
No, you're okay. The percentage, if you have bigger numbers, percentages, like grossly bigger numbers, percentages don't matter. So companies, I don't know if you heard of BlackRock. They're a huge, huge company. They're a huge banking firm. They've been buying up all these single family homes, and they're buying them for ridiculous prices. Well, they basically justified, they're an investment firm though. They buy single family homes for cap rates of like 3%. Whereas me and you as individual investors, I don't think I'd ever go below a cap rate of like 7.25. Just because I don't have enough money to make that worth my time, like to literally make it worth my time. Because I can only do, even with making decent money, I think I could probably only do 2 or 3 deals a year at most. And that's assuming these deals are working well. Like I'm breaking even on cash flow. Like I'm not like having to pour a bunch of money into these deals. I'm not getting screwed with my tenants. I'm not, I'm not getting screwed. But I hope that was a good introduction to the first property. So overall, I'd rate this property slightly successful. And then I'd go in, and this is the second phase, phase two of the analysis. Okay, that was phase one, very simple analysis, where I just said, okay, let's assume we don't do shit. We don't negotiate with the buyer. We just say, all right, we'll pay you 300, whatever. This is the part where I'm like, look, cap rate 6% on this property. Interest rates are at an all-time high. You're trying to get this property off your hand. One side still has a lease in place. Rents are actually on the decline in your area. I probably wouldn't pay more than 275 for this home, given like the sales price. And my justification for that would be, I probably have to put 25K immediately in on this property, like bare minimum, on windows and bathrooms. Like just like looking, this needs cleaned. Obviously, I need to ask about like water heater, roof. This bill could get up to 50K to 100K. Like Thanos said, with the snap of his finger. Real estate, you can look at a property, it can turn from sweet to sour like I don't know, like a fucking piece of bread. Overnight, it could be moldy. It could just leave a sour taste in your mouth. Um, so, and then this is where the real analysis comes in and say, I no longer want this to be an FHA loan. I want this to be a conventional loan. For those loans, you put 20% down, and the interest rate would just it'd probably stay the same. Honestly, for us, we're not super sophisticated lenders, but our total cash outlay would be slightly higher. And for this, I would say our rents, we'd probably get a monthly rent boost of uh I want this to be in the same average. We'd probably get a monthly rent boost of like 400. Oh shit, I fucked that up. What is it? 2185. Okay, then I'll say our monthly rent would be like 2600. And I'm assuming that after we renovate both units, we put in new windows, new kitchens. I would use the comps that we pull from the other places, where some of them were like 1500 and some of them were 1800. I'd say each side would probably land around the 1300 area if we bought this. I personally think rents are going to come down from those gross rents of like 1800. I don't believe that bullshit, but I would use about $1,300 and say, okay, conventional loan, a conventional investor loan, just so you guys know, again, you have to put 20% down. So we'd have to pay about 90K to close this deal. All the same assumptions would be true. For this, I'll pull the actual. Property tax number. The actual property taxes are 47.44. Insurance, miscellaneous repairs. You can argue this miscellaneous repairs number can be dropped down to 1.5 if you're doing any improvements. Things like this, when you're making budgets, can just be argued, but I'll keep it at 3. You can just kind of be conscious of things like that. And you can immediately see how much better this property improves if it's not an FHA mortgage and it's a conventional mortgage. But you'll see your total ROI is not significantly higher, and you're having to put out significantly more cash. Your cash is a difference between
a 61%, $61,000 down payment and a $10,000 down payment. So this is why, Ashley, people who have money win in real estate. Because
Yeah.
if I had enough money to put down and just get a conventional loan, right? And a conventional loan, you don't have to go through an FHA appraisal. You can just go and close FHA appraisal. I'm saying some specific terms, but FHA, they're federally backed mortgages. So they take longer to close on. They take about, if you're lucky, let's say 60 days to close. Where a conventional mortgage, if you're, they don't do a full, colonoscopy before you close on it, right? They'll just say, do you have a heartbeat? All right, get in and out, certify your income certs, make sure your income's legit, sign the docs, transfer it over. You can be in and out of there and
in 2 weeks.
transfer it over. This property's yours now. And sure, it takes more cash up front, but there are lenders who will lend you this cash even against your loan, so you'll never even have to put a dime down. They're sophisticated lending strategies, is basically what I'm trying to say. But I'd write this down as immensely profitable as market rate deals. All of these ones have been meh as FHA deals and very profitable. 5.19% and 8.76% as ROI. So, oh, just good stuff. Good stuff. You can see even at their price of 300K, it's still 3.5 and 7. It's still a deal for everybody, even assuming they don't come down. And you could tweak budgets and move it up to 5 and 5, and it's still a deal for everybody. All right, let's go look at some properties Nolan sent me. Nolan this whole time has been looking at single family homes.
I came across this property. I thought it was definitely worth looking at.
Which one?
The one you're looking at right now.
All right. So this one is a single family home. Let's look. Oh, what the fuck? I can't see it on the map. Damn. Where's it at on the map? Right here. I guess I'll just do this. Oh, it's not going to show me on a map. Huh. It's off 38th. MLK. Hey, we used to live here. Hey, we used to live like right around here. Man, world's a small place. Ashley, you should go here. VIP Center for Business Women.
I absolutely should.
Businesswoman doing business things. All right. Let me pull up that. All right.
Leo, are you currently going to school for this stuff, or like, did you go to school for this, or just like happened to?
I am a graduated business professional. I got a double major in finance and accounting with a minor in economics.
Okay, that makes more sense.
I have been working for 3.5 years at Pedcore, which is like I said, multi-billion-dollar company. Professional. They are vertically integrated. We own our own banks. We own our own. No, can you mute your mic? I can hear myself. We own our own banks. We own our own management companies. So we have property management. We have construction. We have our own in-house developers, architects, engineering. Um, we're as full stack as you possibly can get. We have our own in-house legal team, and our banks are like doubling in size every day. It's ridiculous.
Yeah, that's insane. Holy shit.
Yeah. So I recently, like I said, I recently took a pretty big promotion to portfolio analyst and have been doing a lot more underwriting, where my job basically went from just doing quarterly reports to getting more hands-on with developers and analyzing different sites in particular. And now I make enough money where it's time to start playing Monopoly, I guess. You know, buying properties myself.
Yeah, that's exciting.
Yeah, I think it's a good time to.
I
I think it's a good time to start. You know, when you're 21.
I dropped out of law school, so hee hee.
Oh man, Nolan's dad would be proud. He wants his son to go to law school so bad.
It's not worth. I mean, I guess I don't know.
No,
Why?
I'm gonna
What
be an eye
interested you about
surgeon.
law school and what made you drop out?
I did an internship for a lawyer and met several other lawyers and got hands-on experience and fuck that, honestly. Um,
We're hiring multiple paralegals. We could
dude,
use.
I wanted to be a paralegal.
We're hiring right now. If you want to come, if you want to come work in a professional real estate environment,
Think
pet.
about it.
We're looking for another roommate. You'd have to be Nolan's girlfriend though. That's the only
Oh.
stipulation. Nolan has a six pack. He is hot. He is just a well-rounded human being. I the fact that he's single just blows my mind.
My hype man. Let's
He just
go.
can't talk to women. That's the only reason.
That's
Yeah,
fair.
he's like Sanji from One Piece.
I do have a dog and a cat, so that probably wouldn't work out very well with Brownie. I'm sure there's. It's probably not realistic.
It's okay. I know. I wouldn't want to date Nolan either. You don't have to make excuses.
Oh.
Nolan is gross. All right.
All men are gross. I'm just kidding.
Ask
Also, how
about.
many roommates? Oh,
What?
sorry.
No. What? What'd you say?
How many roommates do y'all have? Is it just you guys,
It's
or
just
like?
it's just Nolan and I. We live in a 3-bed, 2-bath right now.
Yeah, but
Oh, that's dope.
they're a homeless shelter, so like
We
they
we
often
let we
take
let
in
Bo live
homeless
with us
here.
for a while. We let our
Yeah.
friend Kayla live with us.
Yeah, I remember that kind of.
I'm
Poor
like
Bo.
I'm like barely tolerated for a couple hours a week.
Yeah.
We let multiple people come and stay with us. You know, just being
Jake might as
friendly.
well be homeless.
I could I could sleep on the porch. They would probably let me
Yeah. We only
if I
have
need
two
like
people. Jess stays here a couple nights. 4 or 5 nights a week. But
yeah, she's quiet.
You're not like moved in pretty much this point.
no, Jess moved in here, and so she's definitely moved in here, but she just stays at home. She's been staying at home recently to help like her mom and dad, but it's just not
So
been
yeah.
it's just not been official. She's officially moving in like the next couple of weeks though, but she doesn't want to.
Ooh.
She officially moved into our last place. Jess and I have been dating for like 5.5 years,
Right.
and she stood she lived with me more at our last two apartments than she did at this place. It's not really
Huh.
anything like exciting. Like I honestly don't care.
Yeah.
I honestly don't care if I ever see Jess. Like I cannot see Jess for like weeks at a time, and I don't care at all. Um, it doesn't really affect like my day-to-day activities or life because like she still has another year left of school. I mean, I work, you know, 40 to 50 hours a week. Um, I just have I have a good amount of responsibility, um, even outside of work, just with like friends as well. So now that all my friend responsibilities finally just evaporated, so Jess and I have been getting more time to hang out. But I'm happy. I'm happy to that Jess is gonna be here now, but things with Jess. Like I said, Jess and I have always just been great friends. I don't. Jess and I are we're like not possessive with our time at all. Like I feel like if I don't see Jess for like 2 years, it wouldn't even matter. It's like no time has passed at all, you know? It's like we just immediately hook up and connect, and it's just like nothing, you know? It's just like no time has passed. It's just like a perfect friendship.
Yeah, that's awesome.
It's a perfect partnership, you know? And I'm not, you know, I don't get like super sad if she's not here or whatever. I have such great friends. I have such great relationships outside of my actual partnership that it's like, I don't know. I'm literally fulfilled in every part of my life. I could not have a better life. It's ridiculous.
Aw, yeah, that's awesome.
Um, yeah, except her brother, or you know, her brother's Jake, and I'm just like, oh my god.
Bro, I'm the best. I'm the best brother ever.
You're not the best brother ever. You're really not. But whatever.
Oh.
All right,
Jake, that's cap.
let's look. Let's look at this house. You are the best pain in my ass ever. You're the greatest pain in my ass. Um,
The greatest of
Nothing
some.
compares to you, Jake.
true, you are the greatest of something. Yeah, you're the greatest at making excuses, the greatest at procrastinating, the greatest at being delusional.
He's the greatest gay
all right,
streamer.
greatest gay streamer.
That's true.
Um,
True.
Bro, I have ADHD. Of course, I'm a king of procrastination. It's an art form.
yeah.
It's something.
Well, this is definitely a beautiful place. So it's fully renovated. From porch heading out back. The garage here is oversized too. We believe a sewer line is placed here. Asked about $1,000 down. No PMI loan with subprime rate. Hmm.
Well, I did not read that description.
Okay, so they're not going to allow any private mortgage insurance. This basically, Nolan, is just saying uh no investors pretty much, I think. No subprime rates. Well, let's just take a look at the photos. This already looks like a kind of cute house.
Be back.
Does this look centered to you? This is kind of triggering me.
It is not centered. It doesn't look like it anyways.
All right, let's get a group opinion. Is this centered?
It looks like it's slightly right of center to me.
Yeah,
Currently in my kitchen. I'm sorry.
I think it's slightly right of center too, Bo. Maybe it's right on center. I don't know. I'm kind of a dumbass.
It's hard to tell.
The inside looks nice. Nice kitchen. And, you know, they did a good job on the renovation. I like the shower. You know, no sloppy work on the tiling. Oh, nice sliding door. What can I say? They did both the showers nice. Ugh, they got their Peloton, of course. Dude, whoever lives here right now, why are they moving? They're living the life. All right, let's go ahead and look. Duplicate. This place is 3747 Ruckle Street. They're asking 225. 225? How big is this place? Oh, 1,400 square feet. Okay. Things are starting to make sense. 225. 1,400 square feet. No, where was that at? Or I could just do this. Look, 225,000. Here we go. Okay. So I found it. It's on 38th. It's on 38th and Meridian. It's a little bit downtown, but it's not terrible. 3-bed, 3-bath. Be a little bit awkward to rent, but let's see. Let's see if we can find any rental comparisons. $1.9. That's a 4-bed. $2K, 2.1, 2.2, 1.9. All right, let's use 2.2. $2. Oops. The hardest part about these kind of homes is actually finding someone to rent it from you. 2712. Okay, I'll keep the property tax, insurance, maintenance.
I actually have to go for a little bit, but I appreciate your time and help, Leo. This is awesome. I hope you do more of these. It's pretty
No
sick.
worries. It'll be every Saturday and Sunday. I'll be streaming, so feel free to
All
pop by
right.
whenever. You don't have to. You can go back and watch whenever. And if you have any requests, I'll create a here, Bo. Can you create a text channel or something for like requests? If you have anything specific you want to talk about, the next big topic will be about franchising. I want to talk about like specific franchises.
Yeah, you
Are
haven't
you,
given me permissions yet in the server, but I can once you do.
All right, I'll give you permissions.
are you gonna cover like IRAs and like Roth IRAs and that sort of thing?
I was about to go over my Roth IRA right now, son. What I
Oh
hold in it.
shit. Actually, I might be able to stick around. I can for a little bit, not too long, but
Look, I can show you what I hold in my Roth IRA. What do you want to know?
I don't know. Like I have a small one that I just started through work. I want to like have, I guess, a personal one,
What do you mean you
but like
started a Roth IRA through work? An IRA
I
is an individual retirement account. You started one through your work?
no, oh, maybe it's the wrong thing. It's
You
like
mean
a
you started a 401k through your work?
maybe.
That's what you started through your work is a 401k. And
Oh.
I recommend first and foremost you start a Roth IRA.
Yeah,
And
that's what I want to start. I just don't know where to even start or what to
well, there's
do.
multiple platforms and there's multiple things you can do, and it depends on what you're again, it's very dependent on your your level of dedication to understanding. My personal belief is if you don't want to put a lot of time into it, you can go look up investing videos of Roth IRAs, and people just say, go dump all your money into SPY or VU, which are Vanguard, like S&P 500, index funds, which basically are giant trackers of all. Um, um, this is an index fund ETF. This tracks all the stocks in the S&P 500, and if you look at the 5-year, or I guess if you look at the max chart for it, if you invested when it started in September 10th, 2010, you'd be pretty happy today, right?
Right.
And these people didn't make any decisions of their own. They didn't buy or sell any stocks, but Vanguard is an investment company who did. So like you can go, and Vanguard is they are a investment. They're investment bankers who promise great returns, and so you can go with Fidelity, you can go with Vanguard, you can go open an account with them and just buy um, same thing. This is the same concept. Um, the Spider does the same. It's the same thing, and you would be very happy with your returns, right? And these people, you do nothing. You literally, and these are the top 500 companies in the S&P. So I personally don't do that. I trade individual stocks, um, but I also check my IRA daily. I have I have a different strategy than just taking, the 500 individual stocks. I think for someone like you is like I just want to put some money away for retirement. I don't really care to like learn about investing or care about companies too much. Um, I think it would be smart to just start investing, not get like this, I don't know a lot or I don't know. And so the the research the research that I would start with is what broker fits your needs. And that question is um, one that only you can solve. I don't know if that makes sense, but you need to know what your risk tolerance is, what your goals are, right? Um, there are people who want to make more returns. There are people who have different sentiments. There are index funds, for example, that specifically target real estate. There are index funds that specifically target pharmaceuticals. There are index funds that specifically target artificial intelligence, specifically target renewable energy. Like this is one that I own. TEAF. Um, in I don't know if it to have something profile.
So, question.
Mm-hmm.
I've been told there's a couple apps that are good to use that are like,
Yeah,
I guess,
I use Weeble.
Weeble.
Yes.
One of my friends uses Charles Schwab, I think is what it's
Yeah,
called.
Charles Schwab, great app. You can use Charles Schwab. I use Weeble personally. It's zero commission. They have options. They have everything that I would want. Charles Schwab would have everything you would want.
Do I just individually go in and like decide what to invest in, or do those also just pick for? These are kind of dumb questions. I just genuinely don't know.
They're
Do
not
they
dumb
like?
questions. They can pick for you. They take a fee if they do that. If you pick for yourself, they don't take a fee.
Okay.
I
I kind of
recommend
want to.
I recommend if so that, let me tell you real quick. For a Roth IRA, you're using after-tax money to contribute to the fund. You can only put in 6 grand a year right now. Next year, that contribution limit's going to be increased. Some numbers they've thrown out is potentially 10 grand, which is like huge. I'm super happy about that. Um, and so that means so you can start taking money out for specific needs at 59 and a half. Who knows if that number will change by the time we get there? It maybe will. But most people, you can start taking money out when you get to retirement age, around 65 for different things. But tax free, right? The whole point of having a retirement account is you take money out that you earned over time tax free. All dividends are tax free and all capital appreciation. So if you bought a stock for $10 and it's worth 10 million, guess what? Every fucking dollar of that is tax free. Good deal. Whereas if you hold that in an individual account, so a non-retirement account, you would have to pay tax on that. And right now, um, the current tax on capital gains is 20%. Even if that's in the higher bracket, the lower bracket's 15%. To be in the higher bracket, you have to make above $450,000 a year. You probably will never have that problem in your life, But let's assume, you become, massively successful in life and you do have that problem. If you have an IRA, you'll never have that problem. But you know what you will have a problem with? If you don't start contributing that 6 grand a year now, you'll never be able to like build up a big basis in your IRA. That's why I personally say, even if you don't know anything, I would say it's worth it just to reach your contribution limit of 6 grand a year and just have Charles Schwab take their 1% fee or whatever. And just say, hey, can you guys do something with this? Because at any time, you can always, at least this is my understanding, at any time, you can have them sell what's in your IRA and you can take back control of it. And there's no consequences of selling within an IRA, is what I'm trying to say. So, but you want to just make sure you're contributing to it. And the technical cutoff, you can contribute for 2022's IRA up until April 1st, or it's like April 15th, or like maybe May 15th or something like that, of next year. So you have like 3.5 months of next year to contribute into 2022's IRA. But like my strategy, I invest a lot in dividends. Like here, I'll pull it up right now for you. You can see this is my individual investment portfolio. So in my individual account, I have about $10,000 invested, and my annual yield on this is just for dividends. In total, I have about 20, or I don't know. In my individual portfolio, I think I have like $15,000 invested.
What is a dividend?
A dividend is a payment to a shareholder. So a dividend is like its literal definition is a payment to a shareholder. So just for owning the stock, they pay you money.
Oh,
Pretty nice, right?
in theory.
No, it's not in theory. In actuality, it's a huge benefit of owning shares. The vast majority of shareholders own stock because they pay dividends. It's one of the leading reasons why people own stock. It's one of the driving factors behind a stock's value. One of the biggest investors of all time, I'm sure you've heard of his name before, Warren Buffett.
Yeah.
He only invests in stocks with dividends pretty much. That's why he hates companies that don't pay stocks. He'll never invest in tech companies or anything like that. Because it's very hard to value them if they don't pay dividends. You can see here, this just sums all my total investments, and it doesn't take into account. This is just the amount I paid for them, not the actual. This is not taken to account the market value of them. And then in my IRA, I have about $6,800 that I have invested in dividend stocks. And in my IRA in total, I think I have. I can pull it up right now. My IRA in total, I've invested $6,000 the last 3 years. So I think I have like 20,000 in my IRA and like 15,000 in my individual account. But I just did this for dividend purposes, because dividends are the only thing that's really important to track. All the other investments I have are just all in marijuana. I'm a firm believer in marijuana stocks, but they're not really as important to put on here because none of them pay dividends. You value stocks that don't pay dividends completely different than stocks that do pay dividends. I'll get into that at a different time because it's just fundamentally different, but I can kind of help navigate that differently because I can talk to you about this for like literally hours.
Yeah. And like I'm totally interested in all of it. Like I don't want to just
Well, you
oh,
can see here, this is like the sectors that I have. So like even in
oh my
these are like all the sectors in which every one of these stocks is. And I could tell you, Warren Buffett has great advice. He says when you buy a stock, you don't buy it in stock. There's a book called The Intelligent Investor.
Y'all hear Leo shitting his mic? Or is that just me?
I'm
That
sorry.
might just be you.
Oops, I was gonna go on Arium Academy. But he basically said when you invest, you don't buy a stock, you buy a portion of a company. And some people are like, that's cheesy or that's stupid, but I really agree with that, you know.
Yeah,
I really like that philosophy. Oh, she left Discord. I didn't even hear. I'm on streamer mode.
you're good.
But even for you guys who are still here,
Holy, sorry.
no, you're okay.
My all the audio just started screaming at me anytime someone talked, so sorry.
No, you're okay.
You're good.
I was just saying, Ashley, one of the greatest investors of all time, Warren Buffett, said when you're buying a stock, you shouldn't think of it like, you know, just like a stock or piece of paper or anything like that. A stock is representative of a portion of a piece of, you know, of an ownership of a company. You don't when you buy stock, you shouldn't think of it like you're buying a stock. You're buying a business, right? So when you buy businesses, you know, once you get out of the mindset of being a stock trader, really, I'm an owner. That's what he said in an interview. It's a very famous interview. I recommend you go watch it. Go look up Warren Buffett. I don't buy and trade stocks. I buy and sell businesses. Um, REITs stands for Real Estate Investment Trust. So I look when I look to go buy and sell stocks, I look to go understand the company and what they offer. And when you do that, you can start to really, when you get into the nitty gritty of what this company provides to society and how they make money, I think investing becomes the one of the most interesting things, um, just in general, just in all of society, because there are thousands of people at all periods in time who are trying to price securities. I mean, the stock market is literally a minute by minute. Someone else is trying to put a price to this, and you are too. And it's really just like a harmonious process. And you can see I have a lot of different things in this versus um, I don't have a sector on this, but I have it on. Uh, sorry, this is a more harmonious version where I had a. Do I really not have sectors on this either? I had the sectors at one time. I could tell you each individual stock what the sector is. Oh, here they are. You can see I have a lot of municipal and corporate bond funds in my individual account. Makes up, you know, a decent chunk of my portfolio. But yeah, my general advice would be you should set up your IRA as soon as possible, but not before um, doing a little bit more research into the specific providers. I don't think you can go wrong with any of the big names. You know, like Fidelity or Charles Schwab. Um, Personally, I wouldn't try and do it yourself until you do more research. Right now, the market's been in a big downturn. We've been in a recession for like, you know, I don't know, the last two quarters, 3 quarters, although it's not a technical recession. The market's been performing very poorly for the last 2 or 3 quarters. You know, a lot of people have lost 50% of their portfolio or more in value. And so it'd be a good time to enter the market for you, is what I'm trying to say. You know, you can buy in now, but
Yeah.
unless you are informed, you're going to just lose a lot of money. And there is no one way to value stocks. I could, but there is for different sectors, there are different metrics in which, you know, you can look at, and there are plenty. I sent Jake a plethora of investing videos. If you look up Ashley, just like YouTube videos like on value investing, I recommend spend 2 or 3 hours. Look up, fundamentals of value investing, how to value securities. You'll learn a decent amount. You'll learn the terminology. And if you think that's something you want to pursue, even if this year, if you're like, fuck it, I'm just going to put